Hey guys, it's Markets with May, and today is a very rainy and thunderstorming July 25th. I mean, you can hear it through the building, so hopefully it won't be too disruptive to our little call today. All right, it's another crazy day in the markets. We always say past performance is not indicative of future returns. And because we are kind of going Monday's really always a week a day for earnings season. Most people don't report on Mondays. They report on like Tuesday through Thursday. This week is a little different because a lot of people reporting on Friday, but as much as any of that matters, we've got FOMC on Wednesday. We've got kind of a crazy market. So I'm going to get to that in a second, but let me set the tone for what's actually happened today as we start the day. Right now, the markets have been really just up a tick. Like they started up this morning. NASDAQ refuses to play ball with the other indices. And the VIX has been down, then it's been up, then it's been down. My suspicion is that you do get some VIX buyers just to close out the day, just because you've got so much activity later in the week, but we shall see. I am long the VIX via this index, the UVXY, but this is a derivative product off of the SIBO volatility index at 23. Wow, they're actually trading against each other right now, which is kind of strange. But anyway, just see. These are apparently, supposed to be tracking each other, but sometimes because of the way options are and because of where people are trying to get their exposure, they kind of bend against each other for better, for worse. We are seeing oil up, and there is a bunch of news flow. So I am going to talk about that as well. But let's get into this week. Again, we've got consumer confidence coming out tomorrow. That probably will be positive, and that's at 10 a.m. So if you've got positions on, just realize that after that comes out, the market's going to do what the market's going to do to set up in front of FOMC. I think people probably believe confidence is going to come in. Well, it's at 98.7 was a previous. So it's never like there's an estimate. There's a big time estimate on confidence as far as that goes. It's more just like, what are we seeing and how is it going? But possibly and probably the consumer, though they continue to spend, though they continue to be very strong and save for a rainy day, I don't know that they're necessarily more confident per se. And that's what this is really about. 2 o'clock FOMC meeting, the fund rate will come out, but then one of the things that this Fed chairman does is he then gives a conference every single time. And so he will be then speaking to the public thereafter. And you can often see as he continues to talk, how things go as questions come out. What is the press attempting to spin it as, that sort of thing. And then Friday, again, we have inflation numbers plus a bit of literally everything else. So it could be quite an exciting week there. I do want to talk a little bit about, here's the picture on earnings. You've got Google and Microsoft tomorrow, and I do want to address that a little bit, all the tech. And then, for the rest of the week, you've got quite a bit. There's actually something coming out on Wednesday. I can't remember, but Boeing will come out on Wednesday along with a bunch of other kind of a mixed bag of industrials and other items. And then Apple comes out on Thursday. Amazon comes out on Thursday. Maybe Meta comes out one of these days. I actually have it elsewhere. And then you've got a lot of energy coming out on Friday. I want to talk to that because Baker Hughes had kind of this mixed bag of an earnings reports, but we see that literally no one else is having the same problem within equipment. Here's Schlumberger. Sorry, sometimes people pronounce that a certain way. It always makes me laugh, but it is Schlumberger. And it's, an up 14% top line, but up 47% bottom line because there's a real demand. I think he talked in there the fact that you really do have a lot more offshore activity specifically, and you are seeing the movement of equipment all throughout internationally to get to meet the demand for energy, both nat gas and oil. We're very strong in what he's seeing. And that's kind of a big deal. It's kind of important to thinking about how to invest. It's been so volatile. And yet every single company that's reported out this quarter is really bullish, couldn't possibly be less like more bullish about not just this quarter, but a multi-year cycle due to underinvestment in both nat gas and oil. And by the way, none of these guys really talk about coal, but since the whole point of these changeovers as they have been over the years has been to kind of move away from coal, we are seeing in a number of different places reporting that coal's at an all-time high. I'll kind of show you. Rotterdam Port, this one right here says coal LNG surged in H1. So we are, and they're probably some of the greenest folks there, but it's just, you can't, there's no way you're going to get through these crazy hot summers, but we'll come back to that. But this is Schlumberger, and I also want to show you where exactly they are seeing the pickup. It really is everywhere. North America by far. I want you to just really look at, like, this is the pickup in North America. The pickup is not, even if this is up 20%, you can kind of see how much more we have increased the revenue of Schlumberger specifically, but also just that implies that we're able to do more than maybe some other areas are. I mean, look at this, is only a 7% pickup on the Middle East that everybody is so sure has got all this oil that they can absolutely pump out. They either don't have the equipment, or they're just not willing to do it. One or the other is happening here, and you can kind of see that in the number. This is Africa is absolutely upticking, and then Latin America as well is doing their part to increase the supply. So I just really wanted you to kind of see North America. Again, this is another illustration of it, just looking at the numbers. North America is Canada and America, by the way, and also Mexico, in fairness, because they're having a big negotiation right now with both the US and Canada on the way in which they are not feeling like they're getting their fair share as relates to that. So that's something to note. I also wanted you to see, this is from Interpublic Group. They're big advertising. They give you a sense for who's spending on advertising. And this is some of their numbers that came out. Organic net revenue growth. This is existing customers, essentially. They have a lot of R&D, or sorry, they have a lot of like corporate activity. So it's not like I'm telling you, go out and get yourself some exposure here. That said, what I like to use them for is to just see what's the growth, who's advertising and where. And I really want to show you this strength in the emerging market countries as they're being denoted. But really, this is your oil countries, right? So like, and that's kind of highly relevant. I want to show you one other number related to the international before we then move on to some quick big tech. Ukraine, let's see. Did I put it on here? Mexico's inflation is higher than expected in early June. So yes, Latin America is experiencing inflation all the way through. It's being reported a particular way, but it's actually in line with our inflation. And I have talked about the fact that like inflation, it kind of like, goes globally a certain way. It kind of is what it is. And some of the deflationary nations that we would typically depend upon, such as the emerging nations, Latin America, being one big region that would affect us here on this hemisphere, but also China as well. These are things to look out for as we think about what means dollar strength. What does it imply for other nations? But, to see Mexico inflation higher than expected, I think they came in at 7 or 8%. Ours is about there as well. Is and some of the other Latin American countries are coming a little bit higher, a little bit lower, depending on the country. It's a very awkward scenario because they are food producers and they are energy producers. And many of the nations in Latin America are how we might be able to solve some increase in oil or gas supply. And yet they're still feeling the inflation. That really, my bottom line there is really, you got to be taking advantage of weakness for like wheat, corn, and soybeans. And I've said that, I will continue to say it. I'm not a commodities expert, but I'm not dumb as rocks, I guess, is maybe the only other thing I might be able to justify it. But I really do believe that potentially the market is not appreciating the fundamentals that are going on here. Look, if you're the president of one of these nations, you're going to eventually clamp down what you export in the way of grain, because you got this oil thing that's happening and that's causing a problem. And you just can't have people both unable to heat their homes or whatever it is and with no food. That's like a rural recipe for how to get yourself out of office in Latin America. So, and it's not just Latin America that we're experiencing this, but it just happens to be that this is a ginormous breadbasket for the world, all of Latin America. We're seeing it across a lot of different countries therein. I think some folks are thinking, oh, that will necessarily increase exports, but there is a point at which you kind of can't do certain things. And I'm really watching for that as I look at the inflation numbers now, because I think not only do we do poorly on our supplies and our ability to have a good crop, because everything that I'm seeing is coming in with weather that is crazy, for lack of a better way to describe it. But if crazy isn't good enough for you, let's call it not indicative of having a great crop, right? You got fertilizer prices that are so high, some farmers just aren't able to. Here in North America, we're able to afford it, but other farmers around the world may or may not be able to afford to then put more nitrogen on or whatever it is. And then you've got the fact that maybe inflation is going to be enough of a problem where, countries are going to be limited on what they can export. And there was, shoot, did I not put it on here? Yeah, it's over here. This thing, Russia, Lavrov says no barriers to Ukraine grain export. So like, in other words, there was Russia. So one of the big ports down there, and I was trying to find a good example of this. Oops, this is not relevant. Sorry. You know what? I'll get it for the next show. But there, if you look up where the military bases are, especially naval bases, and you look up where you would ship any kind of grain out of, you'll see the overlap is like not the greatest. So what's happening is Russia is saying that they are going to continue to attack the military facilities that surround the ports. Now, I mean, who knows exactly what they're doing? This politics stuff is always really disgusting and despicable, no matter how you look at it, right? And it is war. There's no pretty war. Let's just call it what it is. Whether they're accidentally hitting ports that have nothing to do with military or not, nonetheless, this whole no barriers to export, I think you need to kind of take it with that kind of sensitivity that it probably deserves when you're making your investment decisions associated with whether we're going to have enough grain. I'm going to personally probably pretend like this is, until it's over, it ain't over, for lack of a better way to say it. Because I'm just not of the opinion that this necessarily helps out the grain supply the way that everybody else does. So I just want to share that with you. Yeah, I'm going to skip some of those headlines that I thought were relevant. The last thing I really want to talk about before we get onto it is big cap tech. Big cap tech, I want you to really see, and let me see if I can actually increase the size of this a little bit. I gotta get better at my Microsoft skills here, but if you look at it, here is everything that is reporting. I believe Meta's reporting on Wednesday. It was something I forgot to add to my little chart there. But you can kind of see who's at what valuation and what's going on. And I prefer, as I've mentioned to y'all before, enterprise value to EBITDA. I think that's a better metric than others. Some people like price to earnings. And I just want to remind you, Microsoft last quarter still growing at 30%. They do have a currency issue. Everybody's got a currency issue though, if we're fair. Apple usually was growing around 30%. We'll see what the semi chips situation maybe benefits them, but maybe consumer demand, it's hard to say. But we did in CPI see the consumer spending on electronics improve. Google forward is probably the cheapest of the group by a lot, not just by a little. I mean, really look at these multiples. Maybe you could say, oh, Meta, but Meta didn't grow last quarter. They did the opposite of grow. So Google grew last quarter around 30 times. And then you got Amazon, which again is doing the opposite of growing. So these P's look astronomical, as do the EBITDAs. And so what my point is there is that all of these, if they actually do better than expected, will probably fly out in either direction. So if you find exposure that you're comfortable with in the format of a strangle, and you wanted to do a hail like a lottery ticket, okay? Like, look, betting on earnings, it's a dangerous thing for sure. You got to have a little bit of the heart of a casino. I'm not even going to pretend that that's not true. Of them, I probably am betting on both Microsoft and Google. Those are my two favorites. If anything, I'm probably a little bit more short Meta, and I may live to regret that. But I think that they have a lot more spend to do before it's all said and done. And I think they're going to come out and tell us that they have a lot more spend to do. And I don't think ad revenue is helping them right now. Amazon, I'm not even sure how to think about it. I'd rather just come out and tell us what it is than play that one. And then with Apple, if you look at where the chart is, it sits right in the middle. And I really think it could go either way for Apple as well. But with Microsoft, it's at the low end of its trading range. It actually is cheap, okay? EV to EBITDA at 19 times, 24 times. I don't know that that the business community is so weak that it'll bring the growth rate all the way down to 24 times. But even then, I almost don't care, because I actually think Microsoft is doing a bunch of really smart stuff on its cloud business, on where it's moving towards the metaverse, on any number of things that isn't going away. So with Microsoft, even if it's weak in the morning aggressively, there would be a reason to come in and support the stock. And on Google as well, I think because of Snap's earnings report on ad revenue, people kind of like threw out the baby with the bathwater. I mean, look, who knows? Because the market loves to undervalue things before it starts to give it some love. But I will say that right here, Google is undervalued for sure. And even if it reports a little bit worse than expected, unless it's a tremendously, ridiculously amount worse than expected at 12 times EBITDA, you know, you'd really have to see a negative growth rate there for that to work. And with that, I'm gonna go ahead and hit the pause button and take questions. Hey, David, what's in mind?
Oh, hey, May. Ad revenue is just, I mean, it's really falling off a cliff as far as, I would say, secondary, like Bitcoin, crypto, and sports gambling.
Yeah, I mean, I think with crypto, it's a little bit of a different animal. With ad revenue in general, the revenues have been good, but the operating margins have been poor. And among most companies that I've looked at, you know what I mean? So either like something like an IPG, it actually had, you know, like I said, it had organic revenue growth of like, I think it ended up something in the maybe 10% or something like that. I can't remember exactly. Hold on. Let me show you this chart again. So where most of the folks have been failing isn't on the top line. It's mostly been on the bottom line, you know. So they've either been like, even with Meta from last quarter, they did have like 20% growth, I think, something like that top line. It's just that they were reallocating nearly all of the revenue back to tech spend. And that's always true of any of the mega cap companies. So it's really, how much is Google going to redirect towards doing something else to its platform or what have you. My suspicion is that all along Microsoft and Google haven't felt the need that the generalized CapEx that they're doing isn't growing the company in the right direction. So it's hard to know. I mean, will they increase spending on growth? I don't know the answer to that. I really don't. And I don't think anyone else does until they come out. So it's a little bit hard to say.
Okay, cool.
I know a lot of folks,
Google
because
in a lot better position than Meta.
I know, right? They're very different companies in that regard. And I agree with you. And it's just really unknown. Yeah, because Google's business model. So even though, yeah, they're both ad revenue oriented, their business models are just so different. You know what I mean?
Right.
So I don't know the answer to it. And then with Microsoft as well, it's just an incomparable business model. And then some of the objectives they're doing, who do you really compare them to at 19 times that you think, you know, you got me.
Okay, energy. You said Russia is going to not supply gas to countries with caps.
Oh, sorry. Yeah, you must have read my screen. So maybe I should go through some of that.
Because Germany does have price caps for the
Yeah,
consumer.
let me show you. These are just articles that I pull off on the weekends, and then try to have it something for Monday, because Monday is always such a weak day as relates to earnings. So if I look at this was from Reuters. You know, in response to this whole, we're going to cap the energy, la la la. Russia's like, oh yeah, that's fine. We just won't give you oil then. How about that, right? And so there was this thing that they would keep the third world countries out of that, because obviously the third world countries are like, you're kidding me, right? Like, I'm barely keeping my country stable right now, and you want me to play this game with Russia of chicken? Like, you know what I'm saying? Like, you know, so just remember, have a look at the news flow on Sri Lanka, if that's really confusing, why a country like India might be a little bit concerned about playing too many games with Russian oil right this minute. But then this article came out, Russia's Gazprom tighten squeeze. So they had gotten the part, it'd been this whole like nonsensical, we all know what's really going on subtext last week about them shutting down Nord Stream 1 for a while because they were missing a part, and they were saying, oh, Germany didn't clear it through customs, so obviously we can't turn it back on, you know, so to speak. So send us the part and send us the permits and we'll turn your oil back on. Do you know what I mean? That sort of thing. It's so now the Uniper, which is the big utilities company that's going to need a bailout from Germany anyway, it's going to be very expensive for Germany to work it out. That's part of the reason why I am short the German index, which I will say one more time, it's the MSCI Germany index. I believe the ticker is EWG. So basically this game of chicken, they're basically saying, oh, now we're only seeing 20% of the gas that was there before we had all these other incidences that were going on. This is ugly though. Look, whatever my feelings might be about who's right and who's wrong, I do think that this is probably not the way to come to consensus. But there's politicians that are smarter than me, is what they do for a living. So I just have to stay out of it, for lack of a better way to say it. But it doesn't seem like it's moving in the right direction. And then, like I said, the net effect is a positive for the United States. I'll close on that comment as far as like what I have to comment on that.
Okay, yeah, cool. Okay, you have been long on Mosaic fertilizer for a while.
Yeah.
It's very important. And you showed one of their earnings reports that they were making more money on less volume.
Yeah, they actually do a monthly report of the volume and the price that they're getting. And that's 100% what we're seeing. That was the report from June. It's not even an old report at all. They'll probably do the same thing this month. The fertilizer, the next big, yes, you would apply fertilizer throughout the planting season, depending on what it is you're farming. I know it is what it is there, but the next bigger fertilizer purchases are going to come from the South American nations and Central American nations as they start a different planting season in preparation for their, spring and summer. And we're really going to need them to plant because we just don't have any grain. I mean, I don't know what people are thinking is actually happening in the way of planting crops, but there's only so much you can do.
Cool. What is the soybean ETF you're buying?
Oh, it's just SOYB. Okay. There's one ETF provider. I've done some diligence on this ETF provider, but I'm still kind of learning how they do their thing. I'm sure they're fine though, because they've been around for a little bit of time at this point, but they should track the futures market. The futures market, if you are permission to do the futures, futures isn't my gig, but just really be careful about which contract you buy. A lot of the grains, grains aren't a monthly contract. Most of the agriculture, the contracts map the historical time that you would naturally bought, corn or wheat. So September's harvest time, there's a September contract, but sometime in some of them don't have October contracts because that wouldn't be when you'd be doing certain things. So just be really careful because the bet you really are making is on that portion of the season as well and what supply and demand is like. For me, I don't want to play that because that is the extra bit of what a futures specialist knows that an equities lady just doesn't have necessarily the same grasp on. So I just buy those ETFs and let it go.
Gotcha. Okay. Versus the oil index, which is based on oil companies. This is based.
Yeah. That's right. Like something like an OIH. There may be a tracker to the futures. I'm not 100% sure, but yeah, you're right. Like something like the XLE would be on energy companies. Something like the OIH would be on a specific subset of oil E&P mostly, I think is what that structure is integrated. It's an E&P.
Okay, thank you.
Any other questions? How was your weekend? Hope you had a good weekend. Anyways, all right, we'll end there then. Have a great week, guys. Good luck in these markets. Take care. Bye.